another video on how to trade volatility 75 index. Okay, I just opened a short trade of 0.001 on V75 volatility 75 index. So I'm selling. All right. Now, this strategy involves you placing a trade and also placing a pending order to edge that trade. Okay. Now, if I'm going to start with 0.001, my pending order will be multiplied by 3. So my pending order will be 0.003. Okay. And the edge spacing will be 3,920 points. So what I just did is place a sell trade and place a buy stop, which is my pending order for the sell trade. And the peak distance, or the point distance for the buy stop is 3,920 points. Okay, for the take profit, is 2,500 points. So what I just did is place take profit for my sell trade. Okay, this is a take profit of my sell trade. Okay, that's a take profit distance for the sell trade, and this is the edge spacing. Okay, so remember I said the edge spacing is 3,920. That's this. Okay, 3,920 for a scenario where I'm selling. And if I'm buying, if my first trade is a buy, the edge spacing will still be 3,920 for my sell stop. Okay. The reason why I placed this particular buy stop is to protect this trade. Okay. I expect price to hit my take profit 2,500 points. But if it does not get to that particular point and it starts to retrace, it's going to pick my edge trade, which is a buy stop of 0.003. And if it picks the buy stop, I expect my take profit for my buy stop to be 2,500 points. So it's going to be 2,500 points on either side of the trades. Okay. So I expect my take profit for my buy stop when triggered to be 2,500 points. Okay. And now what about stop loss? Stop loss will be the stop. My trade take profit for this sell trade is 2,500 points, right? So the stop loss will be 6,620 points. Okay. So if that's for my sell trade, same thing applies for my buy trade, or for my buy stop rather. My buy stop happens to be my hedge trade. That is for scenario where I'm selling. For this particular example, I'm selling. My buy stop is 3,000. The edge spacing, my buy stop is placed at an edge spacing of 3,920. Okay. So you got to get a calculator to do this, or you open an Microsoft Excel sheet to compute the take profit, which is 2,500 points. Okay. You also get to compute the stop loss, which is 6,620 points. All right, and you get to compute the edge spacing. Okay, the edge spacing, which is 3,920. Okay, so that's just the setup. Like I said, I sold, and I was expecting price to get to this point, but we are having a support here on the 5 minutes time frame, and price appears to have broken the eye. Okay, which indicates that price might likely go up. Okay, price might likely go up, and if price triggers my buy stop, it's my buy stop. The spacing from my sell trade to my buy stop is 3,920. Okay, so if price triggers my buy stop, then I have two running trades. Automatically, take profit is 2.5. Take profit here also 2.5. Stop loss for my sell trade will be 6,620, and stop loss for my buy trade will be 6,620. So what I'll do next is to wait for price to either hit my take profit or trigger my buy stop. So if price triggers my buy stop, I have to place another edge trade at 3,920 points. Okay, which happens to be around here. There's another edge trade. Now the lot size for the next edge trade. My first edge trade is 0.003. So the next will be 0.008, and the last will be 0.024. So I'm going to stop here if the range continues, and then start to look for a possible way out to close all trades at break even or with some little profit. Okay, if you look at the entries, the orders, the calculation. Okay, if you look at it from 82622.38, which is for my sell order, I have an edge spacing up to 83. Okay, from this order, I have an edge spacing of 830,542.38. Okay, and my take profit for my sell trade, okay, is 824. All right, the stop loss is 833,242.38. Okay, my take profit for my buy trade, for my buy stop, take profit for my buy stop is 833. Okay, the stop loss is 823,922. So that's just the calculation. Okay, that's just the calculation. So I'm gonna try to fast forward the video so that we get to see how it turns out. Okay, I'm trying to fast forward the video for us to see how the trade turns out. Okay, now the buy trade gets triggered. If the buy trade gets triggered around here, and if price gets to this point, it's going to close out all trades at break even. If price eventually gets to this point, we have all trades closing out at break even. But let's see how it goes. We have all trades close out at break even. If price gets my take profit for my buy trade. Okay. I have my second edge trade here, which is a sell stop of 0.008. Okay. A sell stop of 0.008. That has been placed. And I have two running trades, the first trade and the second trade. Okay. First trade, the second trade. And now what I'm going to do is to try and see if I can fast forward the video for us to see what's happening. Let me try and see if I can fast forward the video. Okay. Yeah. Fast forwarded. See if price triggering. Okay, price fast forwarded. Price has dropped instead of price, triggering the take profit and sell stop, closing out the two trades. You can see like a resistance. Price meeting a resistance. Meeting resistance at this point. You can see the retracement. So the second edge trade, which is my sell stop, is still pending. Okay, but my sell trade is running. My buy trade is also running. I have two trades running currently. I have a pending order, which is my sell stop, yet to be triggered. Sell stop is yet to be triggered. But I have two trades running, which is the buy stop, which is the sell trade, and the buy trade. So with the retracement around here, we are just going to observe if price is going to go up to trigger the take profit and close the two trades, or if price is going to drop and then trigger my second hedge trade, which is a sell stop of 0.008. Let's see how it goes. So I'm going to fast forward the video just to see what happens. Okay, at this point nothing happened. Okay, we can see price building. You can see price is building upwards. Price is building upwards, showing that price might likely trigger, close out the trade at the top. If price is gradually building upward, you have this kind of a situation. Expect price to go up. Expect price to go up when you have, though we are on the 5 minutes time frame, but you can see price forming, the candles forming higher low. Okay, as soon as you start to have higher lows, that implies price is going up until you have a break, until you have the break of the lows. If you have a break below, if our price dropping below this low, then you might expect like a retracement or reversal. If it goes below that and also breaks this, then you might expect price to trigger my sell stop. But for now, my sell stop is still intact. I have just 2 trades running. So let me fast forward the video for us to see how the trade ended. Fast forwarded, but let me explain explain something here. Something happened around here. Price broke this low, but price didn't break this low. So if we continue to build up, we might see price triggering my take profit. Okay, so the upward price movement is still in order and is still intact until I start to see a break below the next low. Once I see a break below this low, as soon as I see a break below this low, then I might start to expect price to drop further. But for now, price is building up. Let's see how it all ends. I'm gonna fast forward the video. Let's see how it all ends. Okay.